Hi everyone, I'm Jenny Sanchez, Chief Marketing Officer here at Motivated and Intentional Movement, or commonly known as MIM, where we help families understand financial literacy and tackle those very important details that often get overlooked. Together, we'll explore how to leverage accounts that offer predictable growth, protecting your principal, and of course, securing your assets for the future. So, just a little bit about myself. I used to be on the path towards a medical degree because I've always had a passion for helping others, being empathetic, nurturing, and driven to make a difference. When I discovered this industry, I finally understood my purpose in how I can help my community. Now I dedicate my time to teaching families how to build generational wealth, assisting individuals in creating additional sources of income, and guiding others towards a secure and rewarding retirement plan. Today, I'm more than just a member of MIM. I'm an advocate, deeply committed to empowering others by promoting financial literacy. I've made it my mission to encourage individuals to take charge of their futures and build legacies, not just wealth. If you're ready to take control of your financial destiny and learning the ins and the outs of how money can work for you instead of against you, keep tuning in. This journey is one you don't want to miss. Join me and let's start securing your future today. But before we begin, don't forget to click below to learn more about how we can help you leverage financial tools that'll work for you instead of against you. And we can talk more about how you too can build a legacy that lasts. Hit that subscribe button and let's get started. Let's start with, what is life insurance? Life insurance is a financial product designed to provide a lump sum payment known as a death benefit to your beneficiaries when you pass away. It helps protect your loved ones by replacing lost income, paying off debts, or covering funeral expenses. There are two major factors that determine how much life insurance will cost you, and that's your age and current health. So, the younger you are, the better. Now, the next question you want to ask yourself is, do I have a need for life insurance? You see, life insurance isn't just for older people. It's about making sure your loved ones don't have to struggle financially even after you're gone. The need for life insurance depends on your personal and financial situation. If you have anyone who depends on your income, such as a spouse, children, or aging parents, life insurance is crucial to ensure their financial security if something were to happen to you. Now let's talk about life insurance through jobs. Many people have life insurance through their employer, but this is usually not enough coverage. You see, what people don't take into consideration is that it is tied to your job. Therefore, if you leave, you often lose the policy. Additionally, certain life insurance policies offer living benefits, which means you can access some of the funds if you're diagnosed with a critical illness like cancer to help pay for medical bills or replace income while you're still recovering. Now let's take a look at how much life insurance you'll be needing using the DIME method. The DIME method is a simple way to calculate how much life insurance you will be needing by looking at four key areas. The D stands for debt, which is the total amount of debts you owe in credit cards, student loans, and so on. The I stands for income, which is the total amount of income your family would need to replace if you weren't there. The M stands for mortgage, which is the total outstanding balance of your home. And the E is for education, which is the amount needed to cover your children's future educational costs. Once you add these up, you'll get a total rough estimate of how much life insurance coverage you will be needing. So now that you have an understanding on what life insurance is, whether or not you need life insurance, having life insurance through your job, and how much life insurance you'll be needing, now let's look at the different types of products that are out there for you. The first type of insurance we'll be going over is a term life insurance, which is a type of life insurance that provides coverage for a specific period or term, typically ranging from 10 to 30 years. If you pass away during the term, your beneficiaries receive a death benefit. However, if you outlive the term, the policy expires with no payout. Some of the upsides to a term life insurance is that it's very affordable, which means you can get a lot of life insurance for just a fraction of the cost. Another is its simplicity. You see, some people just want pure life insurance. However, some of the downsides to a term life insurance is that you can get only temporary coverage, for example, 10, 30 years. There's also no cash value built up within the policy, and the cost of premiums increases after the policy expires. Some of the uses for a term policy is income replacement, debt and asset protection, people with kids, and a ladder strategy, where you lock your insurability rate at a younger and healthier age. That way, you don't get hit with higher rates later on. Sarah and James were a young couple recently married with dreams of buying a home and starting a family. James, the primary earner, wanted to make sure that if something were to ever happen to him, Sarah wouldn't have to struggle to pay the bills or lose their future home. They decided that a 20-year term life insurance policy was the best choice, giving them high coverage at an affordable price. For the next decade, life moved forward. They bought their dream home, had 2 kids, and everything seemed perfect. But one fateful night, James was in a tragic car accident and didn't survive. Sarah was devastated, but James's term life insurance policy provided the financial lifeline she desperately needed. Within weeks, Sarah received a payout large enough to take care of their mortgage, cover their children's future college expenses, and maintain their standard of living. Though she had lost her partner, she didn't lose her home or her children's security. James's decision to invest in term life insurance meant that Sarah and their children didn't have to face financial ruin on top of their unimaginable grief. As time passed and the children grew, Sarah was able to rebuild her life, knowing that the insurance policy had done exactly what it was supposed to do, which was to protect their family when it was needed the most. Now let's talk about a different type of insurance, which are permanent policies. One of which is a whole life insurance, which is a type of life insurance that provides coverage for your entire life so long as you continue to pay the premiums. In addition to the death benefit, it has a savings component called cash value, which grows over time and can be accessed during your lifetime. Some of the upsides to a whole life policy is that you get lifetime coverage, cash value growth within the policy, guaranteed premiums, and tax advantages. Some of the downsides to a whole life policy is that it can be out of price range for some people in comparison to a term life insurance, and it has slow cash value growth within the policy. Some of the uses to a whole life insurance policy is estate planning. With whole life insurance, it can help transfer wealth to the next generation without any tax burdens. Another is wealth accumulation, which you can use the cash value as an investment vehicle or a source of emergency funds later in life. Lastly, you can use it as a final expense, which ensures that funeral costs, debts, and other final expenses are covered for your loved ones. John, a 38-year-old construction manager, had finally built a stable life for his family after years of hard work. He wanted to make sure his wife and 2 young children would always be secure no matter what. So he decided to buy a whole life insurance policy, not just for protection, but to build a financial safety net. For years, John had paid his premiums faithfully. At first, the extra money seemed like a sacrifice, but he knew he was making a long-term investment for his family's future. As years passed, his policy's cash value slowly grew, unnoticed at first, but life, as it often does, took an unexpected turn. When John was 55, he was diagnosed with a rare form of cancer, which was devastating news. His medical treatments became overwhelming, both emotionally and financially. But John remembered something: his whole life policy. The cash value had been quietly accumulating all those years. He called his insurance carrier and was able to borrow against his policy to pay for the medical treatments, keeping his family from falling into financial ruin. They didn't have to sell their home, and his children could continue their education without the burden of overwhelming debt. Sadly, a few years later, John had lost his battle with cancer, but because of his foresight, his family received the full death benefit. This gave his wife the ability to pay off their mortgage, invest in their children's future, and rebuild their lives without financial stress that so often follows the loss of a loved one. John's decision to purchase in a whole life policy insurance meant that even in his absence, he had provided his family with the ultimate gift, which was financial security and peace of mind. Another type of permanent life insurance is an indexed universal life insurance, or an IUL, and that provides a death benefit that also includes a cash value component tied to the performance of a stock market index, just like the S&P 500. Unlike traditional whole life policies, IULs allow you to earn interest based on the market's performance while offering downside protection. Some of the upsides to an indexed universal life insurance, or an IUL, is lifetime coverage, so long as you pay your premiums, cash value growth within the policy, guaranteed premiums, and of course, tax advantages. Some of the downsides to an IUL is its complexity. Depending on what your financial goals are will determine how you'll be structuring those policies, since they are tied to the market, or in this case, they mirror the market. You can receive caps on any potential growth. Since there are a multitude of benefits to permanent policies, it may be at a price range for a lot of people. And lastly, you may be at risk of lapsing once you stop paying your premiums. Some of the uses for an IUL is for long-term wealth building, retirement supplement, estate planning, and living benefits. For those that do not know what a living benefit is, it's a product feature that allows you to access part of your life insurance while you're still living to help with any critical or terminal illnesses, injuries, or financial needs. That way you and your loved ones don't have to have a change in lifestyle. Emily was a 35-year-old marketing executive who wanted to plan for her future while protecting her family. She liked the idea of having a life insurance policy, but also wanted to grow her money without risking too much. So her financial advisor introduced her to an indexed universal life insurance policy, or an IUL. For years, Emily paid her premiums watching the cash value of her policy grow. The stock market was doing well, and her IUL allowed her to earn good returns. Since her policy had a floor that protected her from losses, she knew she wouldn't lose anything if the stock market had dipped. By the time Emily reached the age of 55, her IUL had built up a significant amount of cash value. When her daughter was accepted into college, Emily decided to borrow against her policy to help cover tuition costs, all without having to take out any loans or disrupt her retirement savings. When she was ready to retire years later, Emily started using her IUL's cash value as a tax-free income supplement. When Emily passed away, her family received the death benefit, which helped pay off any lingering debts and ensure her grandchildren's futures were secure. The IUL not only gave Emily peace of mind during her lifetime, but also left her a financial legacy for her loved ones. Today, we've unpacked the essentials of financial literacy and how we can pave the way for generational wealth and a secure future. Here at MIM, we're all about empowering you with the knowledge and the opportunities you need to transform your financial destiny. If you're looking for a new opportunity or you're ready to take charge of your financial future, now is your time. Hit that subscribe button, join our community, and check out the links in the description below to learn more. Let's build a legacy of empowerment and success together. Thank you for watching, and I'll see you in the next video. Bye, guys.